Good afternoon, everyone. This is the next video. In this video, we're going to be discussing a little bit about the currency power meter and also about the CICR system. Honestly, the system hasn't really changed. It's just a few components that have changed, and we are only going to talk about the components that have changed, but the underlying principle is still strength and weakness. Now, for those of you who have seen the old videos, the principle, as I said, is the same, but then there are a few indicators that I use which I never used in the old method. Now, it depends on what kind of trading would you prefer. Would you like to trade on the 1 hour time frame, or would you like to trade on the 4 hour time frame? We're going to be discussing both. But then in this video, I will first discuss about the 1 hour. As you can see that on all the index, I have kept it on the 1 hour time frame. Now, there are two different ways to trade. One is using the guppy, which is obviously the multiple moving averages, and the other method is using the Ichimoku. Now, I don't want to discuss about the Ichimoku in this video. I'll have a different video for that. But like I said, in this video we're going to be talking a little bit about the guppy, and more importantly, we are going to talk about the PDF file which I had uploaded. I'm not sure if anybody had a chance to read it, but then I've uploaded a PDF document. It's on the blog. It's also on the Forex Factory thread. I recommend that you read that PDF, and then maybe you can look at this video and to have a better understanding. Now, the only thing that changes here is like in the previous video, the only thing that has changed is that in the old CICR method, we never used a multiple time frame approach. What has changed now is that we are using a multiple time frame approach. So we're looking at strength and weakness on the smaller time frames as well. So we're looking at strength and weakness simultaneously on different time frames, just to ensure that whichever direction you're trading, you have enough momentum going in that direction. Now, today is a Sunday, markets are closed, so we're looking at the last week that ended. Today is the 19th of April, so we're looking at the week that just ended on Friday. Now, as you can see, this is the dollar index, and you have the guppy moving averages. As I said, that we still want to trade currency which is weak against currency which is strong. And now, one of the way to do that is by simply looking at which currency is moving opposite and then trade those currency pairs. But then it is better if you have a more systematic approach, rather than just constantly monitoring charts and then trying to figure out which currency to trade. Now, here you can see is the MACD. This is the MACD that is available in MT4, but as you've seen in the PDF document, that I am actually looking at pullbacks in MACD histograms. So a typical pullback would be what you see here, where the histogram drops below the zero, and when it tries to go above the zero, it fails and drops again. And when you see situations like this here in the dollar index, and when you see pullbacks and it's dropping, at these points, these are good areas to be trading on dollar pairs. Obviously, you don't want to be looking at a basket approach and trade all dollar pairs. Maybe what you could see is you can see that, okay, dollar index has a MACD pullback, so I will look at which currency is moving opposite and then trade that currency. So one approach would be to look at individual currency indexes and look for pullbacks. For example, this one here is a very good pullback on the CHF. As you can see, histogram goes below the signal line and then it drops back down again, and you can see when it drops down again, you see a very clean, nice move. Your guppy moving averages are nicely separated, longer moving averages going down, shorter moving averages going down. So these are ways in which you can see when you see pullbacks. This is also a pullback here. When you see histogram goes up, drops below the signal line, starts moving up again. Now, this is something, when I talk about a pullback in MACD, this is something where I cannot give you a rule, like a 1 2 3 rule that you follow, and if this happens is when you trade. It's just that something that you will learn over a period of time, as and when you keep looking at MACD and price action, you will understand which pullbacks are good and which are not good. For example, this is a very good pullback here. You can see histogram goes above 0. I don't really want to be getting into trading when this happens. And you see signal line crosses, then the histogram starts dropping below the signal line. It fails to go below 0, and then it starts moving up again, and you have this histogram pushing through the signal line. Now, these are moves where we should be trading. So this is a very good up move for CHF. And again, we are not looking at 4 hour right now, we're looking at 1 hour. So we're looking at a more of a day trading approach. Right now, this again could be a pullback. This is a pullback here. Now, when these pullbacks happen, you can see that there is enough potential for you to get in the trade and make a few pips, trading daily. That's the whole approach, using the 1 hour. Now, the MACD pullback, this pullback that we talk about, the pullback method remains the same irrespective of what time frame you're trading, because whether you trade the 1 hour, 4 hour, daily, the pullback is something that you will see just the way you see it in a 1 hour or daily or any time frame. It won't really change. It'll always be the same. But what is more important is that, okay, I know there's a pullback, so should I just simply jump into the pullback and then just start trading? My answer is no, because pullback is something that gives you an advantage, and it tells you that, okay, price is holding up, and it's going to move in the same direction like it's been going. Now, what is important is to understand that how strong that pullback is going to be. Now, if that pullback has to be really strong, or if that move in the direction has to be strong, then there has to be a way in which you can identify strength and weakness of a currency. Now, strength and weakness of a currency can simply be understood by looking at your power meter. Now, this is what I use. So there are other power meters available. This is something that you can access on the link that we have given. So you can just simply access that link and trade it. But what is more important is that, one, when you're looking at the power meter, we are looking at +5. Now, +5 and above is considered to be strong. -5 and below is considered to be weak. Okay, now since we're looking at the 1 hour time frame, our focus would be the 1 hour. Our focus will always be the 1 hour. Now, the way I like to use it is because I'm not going to be sitting and skipping through charts throughout the day, or maybe once in, obviously you don't have to sit in front of your computer the whole day. You can come maybe once in 3 or 4 hours and look at MACD to see if there is some good pullback happening anywhere. That is one way of doing it, but a simpler way of doing it would be to simply look at the power meter, which is an easier way to do it. I don't want to look at my MT4. I rather have this this is web based, so you have it on a browser, so you can keep your browser open. If you have a mobile phone, the way I like to use it, if I have a mobile phone, I have this browser, I have this open on my mobile phone browser, and I keep it in a horizontal position, so every time I open the browser on my cell phone, I can see this. Now, the thing about this online tool is that it refreshes every 30 seconds. Now, I've received some questions that when you say it refreshes every 30 seconds, do you mean that the values will keep fluctuating every 30 seconds? No. This is calculating it every 1 hour. So the indicator will calculate strength and weakness, average strength and weakness of all currency pairs in that group, and give you a number. But this is it is doing it on these time frames only. That's the reason why this is going to be a little different than the other heat maps or the strength and weakness tools you have, which according to me are more fluctuative. So that will fluctuate. This does not, because this is calculating strength and weakness average for all euro pairs, yen pairs, pound pairs, so on and so forth, and giving you a number. Similarly, this will do it for 30 minutes, this one for 15, this one for 5. Now, why it refreshes every 30 seconds is because anytime you open your browser, you can see the most latest numbers on your browser. That's the reason why it refreshes every 30 seconds. But these calculations don't happen every 30 seconds, right? So it is calculating this. It looks at every 5-minute candle, and then it performs a calculation for the 1 hour time frame, 30 minute, 15 minute, and 5 minute. So every time you have a new 5-minute candle open, it is going to calculate it on individual time frames. But on the website, the website refreshes every 30 seconds, so that whenever you open the browser, you see the most latest information, right? Now, as I said, the better way to use for me would be to simply look at the browser, and let's say if I open my my browser and I see this situation, I can see now, since I'm trading the 1 hour, I'm not going to be looking at the 4 hour. Okay, I'm going to be looking at the 1 hour, and I'm going to be looking at time frames below that, right? Because I'm not looking to make 50, 100 pips. I'm not really targeting that. Of course, if the move is really strong, then you would get it. But then if you're targeting maybe say 20 or 15, 20, 25 pips, then this should be enough to push your trade in that direction and grab those pips. Now, what I'm looking at is, let's say if I open my browser and I can see, okay, I'm looking at 1 hour. I'm not looking at the smaller time frame. Since I'm trading 1 hour, I'm only going to be looking at 1 hour. I can see euro is strong because it's +5 and above. So I say, okay, euro is strong. Now I need a currency which is moving opposite. Now I can see yen -4, but then, as I said, I need it -5 or below. So I'm not going to consider this for now. But I can see clearly there's AUD. There's AUD, which is weak. Now, the way I know, what I'm going to do is, I have Euro AUD as a pair, and then I have CHF, which is strong. So I have AUD CHF. So you have Euro AUD long, AUD CHF short. Again, these are correlated pairs. If you know, Euro AUD and AUD CHF are correlated, so they will always move opposite each other. The Euro AUD is a potential long, and AUD CHF is a potential short. But I know that these are two pairs which I will open on my chart, Euro AUD and AUD CHF. Then I'm going to look at this. Once I have my chart open, let's say, let me pull up Euro AUD. Obviously this is we're looking at backdated, but never mind, because okay, so this is somewhere around this area here. So the screenshot was taken back then. I have uploaded this on the blog as well, sorry, on the thread, so you can see it. Now here, as you can see, Euro strong, I don't remember the date exactly, but this is Euro strong, AUD weak. So let's say we can use this part of the chart, never mind. So let's say if I have Euro AUD, right, and I can see that Euro AUD is in an uptrend. Now for me, what is important is that, one is that I will look at the ATR, right? So I will look at the ATR projection, and then I will, so let me just put that in. Okay, let me just put the, okay, I don't know why I can't pull it up. Let me pull up Euro AUD on this chart here. Okay, I don't think ATR, I don't know, the indicator is not pulling up. Okay, anyway, maybe because I don't have a connection at this point, but nevertheless, euro is strong, and euro AUD is my currency pair which I want to use. Now, when I know that if euro AUD is in an uptrend, and if my currency power meter is telling me that euro AUD is a currency that you would want to trade, one way I would trade is that I would trade when I have euro strong on all the time frames, right? When I have euro strong on all the time frames, it basically tells you that euro is actually moving strongly on all the time frames. So this is a good time to be trading the euro. Now, AUD is weak, but then you can see AUD is weak on 30-minute and 1 hour, but on 15-minute it's not, and the 5-minute, in fact, it's a little strong. But nevertheless, you have your two longer time frames which are telling you that it is weak, so there is a possibility that this will go back in the same direction. So when I look at, let's say, a euro AUD chart, and let's say I know that it's going to come back in the same direction, either you could put a pending order above the previous high, or you could simply wait for an alert to be generated. So an alert typically would be euro is strong on all the time frames, and let's say you get another alert that AUD is weak on all the time frames. Now, when that happens, you can simply go long on euro AUD, and then you can grab a few pips from the market. Now, in this video, all I'm trying to explain to you is not really a typical entry mechanism, but all I'm trying to show you is how you can identify potential pairs, and then you can use maybe one of your own systems to trade it, or you can trade when euro is strong and AUD is weak. Now, you can either use Guppy or you can use any other system that you have, but the way I would like to use it is, let's say if I have a euro AUD signal, and let's say if I see a nice clean move of the histogram and the signal line, or maybe I see a pullback on the MACD, then I would trade that currency pair, right? Now, what the other thing that you need to remember about the power meter is that since the website refreshes every 30 seconds, what is more important is that here, as you can see, you have the ATR projection, right? Now, in an ATR projection, it tells you the daily range, right? So let's say in case of the GBP index, it said that the average trading range is 150, sorry, and on Friday it already touched 160. Now, it also gives you a percentage. Now, the way I would like to use it is that if, let's say, I get a signal or an alert on the currency power meter and I want to trade that currency pair, then I will look at the ATR. If the ATR, the trading range percent, is already gone too far, so typically, let's say if it is crossed 60%, then I may not really trade that currency pair. But let's say if I get a signal and I see that the ATR is still maybe 40 or 50%, I know there's still potential for it to go further in that direction. So what I'm going to do is I'm going to be trading that currency pair. One, because the CPM tells you that there is strong readings across the time frames, there is weak readings across the time frames, so that currency pair is a good pair to trade. And to top it, if you have ATR within 50 or 55%, it still is a good currency to be trading. What I recommend you to do is open the currency power meter. Tomorrow is a Monday or Tuesday. You can see, you can just observe it for some time. You can see how the power meter updates, and then each time you see, from the 1 hour to 5 minutes, each time you see a currency aligned in a specific time frame, what you can do is you can trade it, right? And also what you could do is you can take a demo trade, right? You can take a demo trade, and each time you have a strong currency and a weak currency aligned from 5 minutes to 1 hour, simply look at price action and see how it behaves from that point till end of day. You will see that when such situations happen, currencies will tend to move quite strongly during that day, right? And the best way to do it is by simply observing. So you can open the power meter, you can check it maybe once in every 4 hours. So after the close of every 4 hour candle, you can just refresh the screen and you can see what are the latest readings. And then based on what readings you see, so whatever is strong and whatever is weak, simply observe those currency pairs, put it in your watch list, see how price behaved towards the end of the day, or maybe throughout that week for that matter. So you can see that, okay, I observed in a situation like this, let's say on a Tuesday, and then you saw that on Wednesday the price did go up, or maybe it did go down depending on what reading you saw here. But you will see you see a very clear move on those currency pairs when such situations happen. So I really suggest that you open the power meter on the website. You can keep it open, you can check it once in 4 hours, and all I'm telling you to do is just simply observe price action when such situations happen, right? When you have a currency strong on all time frames or weak on all time frames, simply observe. And then what I'm going to do is that in the next video I will be talking a little bit about more about the ATR projection, and also what I could do is I could discuss trades that I'm going to be taking, or maybe trades that I've taken in that specific week. Okay, thank you.